Hi guys, welcome back. This is part 2 of German real estate analysis. If you haven't watched part 1, no worries, all parts are independent of each other. In this video, I will share with you the reports published by Deutsche Bank and PWC on investing in German real estate and will answer the following questions. Is investing in real estate now a good time? Are we in a real estate bubble? And in which city one should buy a house? I will also discuss with you the factors that influence real estate market, how they affect real estate market, their contributions in the past, and how it may change in the future. At the end, I will share with you my opinion on whether one should invest in real estate now or not, and what can we expect in German real estate market once the pandemic is over. So, if you think this is something interesting for you, then sit tight, hit that like button, and let's start. As you know, I have divided the whole real estate market analysis in 3 parts. So in this second part, we will discuss 3 factors that influence housing market. First factor that affects the real estate growth is construction of new houses. New construction is further dependent on labor and bureaucratic processes, which in turn is weighing down the new construction of houses in Germany. The lack of land zoned for construction, which is particularly problematic in urban centers, remains a primary obstacle to the construction of new units. Laborious planning and approval processes are also hampering construction, a factor made even worse because of low staff at building authorities. The number of civil service positions at building authorities has declined by around 10% since 2011. Even many investors have complained about the lengthy procedures in building authorities. Well, this doesn't end here. Once a building project has overcome this obstacle, the shortage of skilled workers at construction companies are the next hurdles to completing the construction of new residential unit. According to figures published by D-Status, although the number of employees in the construction industry increased by 30% between 2009 and 2019, the order backlog, however, tripled in the same period. And the current pandemic situation has made it even worse, as skilled workers from abroad are unable to enter the country now. So, slow construction activities are unable to match up with the real estate demand, which at the end increases pressure on real estate market and triggers the price rise. Not only this, the construction industry is building more single family houses but fewer multi-family houses, and is therefore failing to meet the overall needs of the rental market. Well, this is the situation in general. However, if we check it based on big urban cities and rural cities, it is completely different. In rural areas, too many new single-family houses were built, which have a dampening effect on further rent rises and price growth rates in medium term. However, despite a general increase in construction activities, there is a marked undersupply with increasing demand in urban areas. Hence, in urban areas, both prices and rents are likely to rise even further in the coming years. So to conclude, in short to medium term, we may see positive growth in real estate market, especially in the large cities due to high demand and low supply. However, in longer term, the population of Germany is shrinking and growing older, and the number of new households is predicted to increase, especially to 2035. This mismatch does not look favorable for German real estate market. Well, the overall population is decreasing. However, there is large regional differences. So, an intelligent real estate investor would be better off investing in and around big cities than in rural regions of Germany. Also, check part 1 to learn more about Germany's shrinking population. Well, let's dive into the second factor that contributes to the real estate market growth or decline. This factor is the rent that you can receive from your property. As an investor looking for positive cash flow, rental income is very important. If the average rent that you can get is low and the price of the house is high, then it's not a favorable rental yield. In Germany, we have seen increase in house prices and rents recently. However, this increase in rents in major metropolitans have become a pressing issue, and government has already made many policies to counter it. One of them is the rental cap, that is the maximum rent one can charge. You might have also heard this term. It is called Mietpreisbremse in German. It is possible government will further tighten the policies related to rent, which could slow down the price growth we are seeing right now. Well, either investors will find a way around these policies, or it will lead to decrease or a halt to real estate price. So we discussed the perspective of a landlord. Let's check a tenant's perspective. If rental prices increases beyond a point and mortgage interest rates remain low, then many tenants will find that it would be equally affordable to pay off a loan and may decide to buy their own home. So it's both positive and negative for real estate market. On one hand, there is an increased demand. On the other hand, real estate market is less attractive to buy to rent investors because of low number of potential tenants. So to conclude, with time, without government interference, market will automatically come to a rent and house price that complements each other. However, if government interferes and affects the rent negatively, it can have a negative impact on real estate market in general and can end the real estate cycle sooner than expected. As per this survey, housing is the second most important issue for Germans after climate change. But it was pre-pandemic survey, and currently all the focus is on resolving the current situation and helping the economy to recover. But once economy comes back to normal, hopefully by 2022, housing will be a topic that no one can ignore. Therefore, it is likely that we will see some new political reforms in this direction in the short term. However, whether the result of these actions will be favorable to investors or not, only time will tell. Next factor that affects the real estate market is lack of macro-prudential measures by the government. One thing that Deutsche Bank's report asserts the most is the lack of macro-prudential measures by the government. The effect of lack of these measures is government trying to regulate the real estate market to control the real estate and rental price growth, however, ending up with the opposite results, that is pushing the prices even higher. Deutsche Bank provided several factors and examples to support their case in their report. Well, let's check them one by one. First factor that they mentioned is the lack or no clear communication to investors about the fundamental value of German residential and commercial real estate. As per their report, we would need a solid and reliable assessment of the fundamental value of a property. For residential properties, Deutsche Bank believe a comparison of German cities with other European cities, and on top of it, corrections for competitiveness, income levels, quality of life, and other factors could be a way to assess the fundamental value of a property. Well, based on a simple model such as this, ranges could be defined for under and over valuations of the fundamental value, with extreme ranges being defined as bubbles. Using this model as a basis, regulators would be able to communicate, well, at least roughly, which measures will be taken when the fundamental value is exceeded by a certain margin. As neither investors nor regulators know the fundamental of a real estate, they cannot take appropriate measures or judge whether a housing unit is overvalued or not. So presently, many people may say real estate is overvalued or is a bubble. However, there are no concrete parameters on which one can say that. I personally think when buying a house is not possible for an average person, then market has entered the high valuation territory. However, if average person still have means to own a house and pay back the mortgage, it is safe to say that housing markets still have some room to grow. However, please note, none of it means that the market will crash or keep growing. It is just one of the means to check the depth of the water. Next factor is the creation of random policies by the government and hoping to have a collective positive effect. Some of such policies are special accelerated depreciation allowances, reduction of construction costs, the new law on incentives to build housing for rental, Baukindergeld, etc. All these policies raise real estate prices and rents, even though this is exactly what the regulators wanted to control. I will also post the link of these websites in the description so that you can read it in detail. And if you want me to cover how Baukindergeld works in my videos, let me know in the comments down below. Well, there is also a fundamental problem with the macroprudential measures. These measures are not having a targeted effect, as no distinction is being made between new buildings and existing properties, as well as between the number of housing units required in urban areas versus rural areas. Therefore, overly loose regulations only constrain real estate prices and rents to a marginal extent. On the other hand, these same regulations constrained the new construction activity, which ended up in continued shortage of housing units. At the end, regulators do not have sufficient information to regulate the housing market in a targeted manner. So overall, regulations are being introduced here and there in the hope that they will have the desired effect at some point in time. However, an overall concept is lacking in both the political world and the real estate industry. If a concept were in place, one would be able to make a detailed analysis now of how many residential units are required for which tenant segments, in which towns, and under which demand trend assumptions. So to conclude, the gap between demand and supply is going to stay there for at least 5 years, and with supply of households being lower than the demand, both real estate prices and rents will continue to rise, especially in urban areas. So as I mentioned in the part 1 of German real estate analysis, An intelligent real estate investor would be better off investing in and around major metropolitans. Also, I think German real estate market was undervalued for a long time, and yes, the prices have increased drastically the past decade, but I do not think German real estate market is a bubble yet. However, the risk of housing bubble is increasing.